students, it's time to start learning seamlessly with our two new convenient payment options, EMI option at 0% interest and buy now, pay later. Let's understand how it works. To avail the EMI at 0% interest option, choose your preferred course and select the EMI option. Once selected, click on Walnut 369. Next, you'll have to click on Get OTP and enter the OTP. Once done, you have to enter your PAN number and date of birth. Once added, then click on Continue. Next, you'll be asked to enter your Aadhaar card number for KYC verification. Note, PAN and Aadhaar number should be of the person with whose number you have registered on the app. Enter the OTP and click on Continue to proceed further. And select the preferred EMI tenure amongst 3, 6 or 9 months. Once selected, you'll have to click on Agree and Continue to go ahead. Enter your UPI ID to verify the same and click on the Pay tab below. The payment will be done and you can start studying from here on. To avail of the Pay Later option, you have to select the EMI option and select the 1 month tenure option. Then click on Complete Purchase. That's it. You will have to pay the respective course amount after a month. Get going and enroll in the top selling courses now. Thanks for watching.
Flat pricing. This is a part of fixed income, and if you're looking for fund accounting into, then you may expect question on this flat pricing part. Because flat pricing also known as clean price as well. So we'll see that with an example, so which will help you to explain it. And always, all the time, I told to my client, see guys, theoretically to explain any concept, finance concept would be difficult for anyone, including me as well. And 90% people, they lack with the, how to start, where to start and how to explain to others, because they know only definition part. But if you put anything into the example, then that would be like very easy for you to explain it to panel, maybe to anyone, right? So this is the best trick that I would like to share with you. If you want to explain anything, so create a small example, then see, would be very easy, and you can explain like without any barricade. Anyways, so let's start with this concept, which is flat pricing. Flat price. What is flat price? Flat price, it means full price minus accrued interest, that we call flat price. See this, the full price of bond and security minus the accrued interest, this is the price quoted by the bond dealer. So bond dealer basically, so actually buy and sell the bonds, right? Bond dealer, it means who buy and sell the bonds. For equity, for equity, we know that we have NSE and BSE, stock marketplace, where you can buy and sell the securities. The same way in a bond market, you would see the bond dealer who offer the buy and sell facility. Let's say, as we all know that bond interest payment, who pay the bond interest? The issuer pay the bond interest, right? Okay. When issuer pay the bond interest? Quarterly, maybe quarterly, yearly or monthly, that depends, right? But in between the year or in between the quarter, you would see the buyer and seller of a securities or holder of the securities, they may also sell it. And if they sell it, they expect the accrued interest with the bond pricing part or bond value part. Let's say bond value is 100 plus, let's say they have served particular bond for maybe 180 days. And if you calculate this, first of all, we'll take the example and we'll calculate the interest payment, and that's how you can understand this term. $1,000 per the face value of the bond, and the interest payment, which is 10%, right? Then the bond interest the bond term is for next 5 years and coupon is going to pay semi-annually. So it means every 6 months you would see the company will pay the 5% interest payment. Coupon, it means it's interest payment. So we'll calculate for a year, it goes around 100, right? And for a half yearly, it means for a 6 month would be around, just divide this, 50 rupees. So this $50 or rupees would be for 6 months, right? And if you are, let's say you are selling the bond in 3 months only, then 50 divided by 2, so it means 25 interest payment, correct? If you want to sell the bond, then you will expect 25 rupees interest payment also. But in this case we are talking about flat pricing. If you sell the bond without this accrued interest, so it means if you sell the bond at only 1000 USD, then that would be your clean pricing part. So in short, if the bond is getting settled without accrued interest, that bond price we called flat price. That bond price we called flat price. Here if you see the interest which we have calculated, even the bond the particular holder is holding for 3 months, ideally that bond holder should have received $1025 because 25 that the bondholder earned accrued interest as well, but the buyer is not ready to pay it. Buyer of the security is not ready to pay it the accrued interest. So it means in this particular contract the bond is going to settle without an accrued interest. That part we can call clean pricing. Still, if you have any question about this, you can text me in comment section. I'll again explain this with a simple examples, or maybe I can, if you're looking for explanation in Hindi, let me know, I'll explain it Hindi as well. But the important is, in short, if you're buying bonds but you are not paying the interest payment, so that term you can call flat pricing. Okay, another concept which is full pricing. So what is full pricing? Full pricing, which is, you can say, exactly would be opposite term of flat pricing. Here flat price of a bond plus accrued interest. Let's say flat price of a bond is $1000 and 10% as the interest payment. So for per year would be around 100. Let's say up to 1 year, if the bond holder is selling the bond at $1100, and if the buyer is ready to buy this, because this is your accrued interest and this one is principal. If the buyer is ready to buy it, if the buyer is ready to buy the bonds with an accrued interest, then that would be the part of dirty pricing. Because see, issuer will pay the interest payment maybe at the end of the year, maybe at the time of maturity, that would be depends on the bond. But before that, for a time being, the buyer of the bond is paying an accrued interest to the bond seller. So in short, if you want to define this in a one line, so I'll make it again simple concept, which is, if you are buying the bond along with the interest payment, or bond is settling with an accrued interest payment, so that pricing part we can call full price or dirty price. Full price or dirty price. Okay, so might be you would have a question, so why someone will buy the bond with an accrued interest? See, in a bond market, you would see the interest calculation or coupon calculation process, which is like actual days divided by 360 and 365. 360 for private securities and this is for government securities. Basically for government bonds they calculate the interest payment as per 365 days, and private securities they calculate or they offer the interest payment on the basis of 360 convention, right? If you see, let's say if you take the example of this, in this example, the bond will accrue the $100 interest payment for per annum. Per annum. So it means for a 360 days or maybe 365 days. You have purchased this bond. You have purchased this bond here, right? Then you're holding this bond, and every day bond is getting accrued interest, right? Bond is getting accrued interest, and here let's say your accrued interest amount is reached to the 50 USD. Why? Because you have served 180 days. And if you want to sell the bond at this stage, then how much amount or how much return that you're going to expect? See, if you sell the bond here, then you will not receive interest payment from the issuer, because issuer will not pay the interest payment to you. Issuer will pay the interest payment to you at the time of maturity or fixed date which has been set or which was communicated to you at the time of investment. On that date only issuer will make the payment to you. But if you want to sell your investment, sell your bond to someone, right, then think practically, guys. Don't you expect this $180 interest payment from your investment? Will you expect or not? You will expect, right? Why? Because if you're holding that bond since the beginning, almost you have served 180 days, so it means you will expect the 180 days accrued interest. And in a fund accounting book, when the security will settle in the books of account since that date to till the sell date, we record the accrued interest payment in the books of fund. And at the time of selling, if you, the buyer of the security, let's say if you sell the security to this lady, and this lady is denying to pay the $180 interest payment to you, then that would be your loss, right? So in short, but the point here is issuer will make the payment here, let's say, so it means up to 1 year. So eventually buyer is paying the accrued interest to in advance. That's what they are saying. It is a dirty, that issuer will pay the interest payment to me at the end of the year, but at this point in time I'm paying it to you. That's what they're saying. You know, it is a bad one. It is a bad thing that I'm paying you the 180 from my pocket. But eventually the buyer who is buying the security along with an interest payment, that buyer also will receive the interest payment from the issuer at the end of the year. So I hope so this flat pricing and full pricing, these two concepts, now we will get idea about. And even though if you want to explain it, put it into the example and then explain it. If you don't put this all into the examples, then it would be difficult for you to explain theoretically. Okay, yeah, so I'm done with this two concept, one which is flat pricing and full pricing. So we'll see you in next session with the different concept. So I'm sure you guys are enjoying. So I would like to know your feedback about all this. Send me your feedback. Even though for watching all this concept from the YouTube, I would request them as well. So guys, please share this content to others, let them also learn it. So our intention is to make you aware about all these important elements which can create a big impact on your career. So I'll take a leave now. We'll see you next session with a new concept. Jai Hind, Jai Bharat.